Welcome to the second part of Future-Proofing Banks, Outlook and Opportunities for Indian Banks 2025. Hi, this is Shreya Sinha from ETBFSI, a dedicated news platform that gives latest updates and covers technology in the BFSI domain. And in the second part of Future-Proofing Banks, we will understand how banks can maximize the tie-ups with fintechs. We will also be looking at the digital banking essentials and priorities, and of course, the rise of neobanks. And to discuss all this, we have with us today, well, we have a major in the house, Major Ashish Ahuja, Chief Operations Officer, Fino Payments Bank. Welcome, Ashish.
Thank you so much, Shreya, and it's a pleasure being on the panel with all of you. Thank you so much.
Our second speaker is Topendra Bhattacharjee, who's the Head Digital Banking, RBL Bank. Welcome, Topendra.
Thank you, Shreya.
And finally, we have with us Sumit Batra, the Head of Technology Asia, Backbase. Welcome, Sumit.
Thanks, Shreya. Hello, everyone.
Welcome, gentlemen. So let me begin, the roundtable discussion by asking you the first question, Ashish. So given the times that we are in right now, and that no one would have imagined of, how can banks reinvent and deploy digital banking strategies? And why has that become a necessity now?
So absolutely right, Shreya. So times have really changed, and I think nobody foresaw this coming in the fashion that it has. The good part of it is that I think by and large, from a banking standpoint, I think people have faced up to this challenge in a very, very apt fashion. So India has some fantastic technologies when I look at the digital side of it, and their uptake and their readiness on that front has really helped India, and I would also mention Bharat, which is where Fino Payment Banks is typically prevalent, in that segment, which has taken the rails that are present like AEPS and IMPS, all these digital rails have been utilized to the fullest. So it's a question of, I think, adaptation at a really, really fast pace. One doesn't need to second judge the customer, whether it be a digitally savvy customer or whether it be somebody who's not digitally savvy. The aspirations of the not digitally savvy have really come up fast in the last, I would say, 6 months since the pandemic has set in. And their uptake of these technologies and utilization of these mediums is something which gives proof to the fact that banks need to keep pace with the aspiration of their customers, of their target segment, not the other way around. So frankly, as long as what your target segment needs, there are enough tools which are today available to reach out to them and to ensure that basic banking services are available to the mass segment as well as to those segments which are any which way very prevalent, and easy to do banking for that standpoint. Back to you, Shreya.
Thank you, Ashish. So yes, you spoke about aspiration of target segments, and to figure out the aspiration of the target segment, that is very, very crucial. Now coming to you, Topendra, leadership teams at large banks know that they need to move rapidly to react to digital disruptions. So what are some of the digital banking essentials that every bank should look at, given the fast-paced transformation that has not spared anyone?
Yes, of course. Thank you. So I will take it up from where Ashish left, actually. And I mean, sure. While he spoke about Bharat, on the other side, in India, as we say, and in the metro and the semi-metro kind of environment as well, suddenly in the last, say, 120 days, things have changed rapidly. And it has changed from a perspective of not only adoption, but or rather, I would put it this way, that there used to be an inertia to get into digital channels for various reasons. So we didn't see that kind of an offtake pre-COVID in terms of the channels per se. But come COVID, and where access to banking reduced considerably, or rather physical bank branches reduced considerably, and people stopped getting out of their houses, etc., suddenly there was this inherent need of doing the transactions on a system which people were not too conversant with in the general mass sense of it. So what happened was people started doing these transactions on their mobile apps as well as through their internet banking pieces, which was not something that they were doing earlier. Interestingly, at our end, we saw a rapid jump in terms of things like FDs being booked through digital. So 1 out of every 2 FDs that are being booked in our bank are through digital. So it's actually more than that. Actually, 60% of the FDs are booked through digital these days. Same with the SIPs, etc. Multiple transactions which were to be done in branches earlier has moved into the channels. So there is no choice for any bank to think that we will stay in the periphery and not jump into a scenario where we have enough and more enablement to our customer base to do digital transactions. So therefore, if you look at it from our perspective, we have seen our 2022 kind of a roadmap come into a quarter end roadmap for or a quarter two roadmap in 2020. So it is as bad as that. So we are looking at building things which we had planned for maybe a couple of years from now to doing it immediately. It is especially because the way in which adoption has changed the entire horizon. It is no more that we can delay things or not enable our customers, otherwise we'll be out of the race. And more so, branch transactions which had been traditionally done in a physical world now is starting to move into digital. And these are very, very intricate transactions. So like a submission of a particular form called 15GNH, which is a customer transaction which used to happen for senior citizens, we are seeing 95% of these transactions now happening through digital channels. So it's a huge shift, and that shift cannot be left to another day. So therefore we have to move at that rapid pace in which adoption is happening, or rather the customer base is being forced to adopt, and therefore we have to enable our customer bases accordingly. And thus all banks per se are running that race as soon as possible, and I'm sure every boardroom is now discussing this entire piece. Thank you. Over to you.
Yes. Yes, Topendra, yes, bank boards are definitely, discussing and, charting out, in devising the strategies. Sumit, my third question is to you. So disruptions that have been led by COVID-19 accelerated the adoption of digital channels higher than ever before. And this is pretty evident in the case of global banks. Now, back home, how can banks adopt and execute the right digital strategy? If you can throw some light on that.
Yeah, sure. Thanks, Shreya. Thanks for asking. So if you look at what Ashish has said and what Topendra has also highlighted, and they have seen the changes in both their banks. So COVID, in short, has been a chief digital change officer in our times. Maybe it is the biggest single event that has accelerated the digital transformation more than what everyone was trying to do. And the impact is global, as you mentioned. So some of the numbers, if you look at Spain, in Spain, the number 20% rise in number of people using digital channels. In India, you have seen numbers from Topendra and Ashish. So if you were to look this into perspective, this is a short-term impact which is driving the long-term strategy in quick. So like in RBL's case, two years roadmap getting shifted into short-term, and an adjustment is there. On the longer run, if you look at Indian market, it is also important to see the construct in which banking has been operating in the last 2-3 years. India as a whole is moving to platform economy. So India Stack is leading the way. UPI has been a game changer. Video KYC was introduced earlier. Now account aggregation framework is going to revolutionize. So if you look at these indicators, this is a breeding ground for innovation for anyone, whether it is banks or it is for any non-banking player as well. And we have seen the impact what UPI did in terms of non-banking players taking the experience out of it. So it is very, very essential, whether it is in short run or in long run, to first look at the overall customer experience. Would customer first be part of his or her life and try to solve the same problems? The second important part, from the same digital strategy part is, we all talk about customer experience. Recently, we published a report with IDC looking at banking in 2025. Now with COVID, yeah, it might actually become banking in 2022, but some of the principles are essential. So some of the interesting insights from that is 60% of the banks in India admit that they struggle in offering intuitive, relevant, and personalized content through their channels. Now, it is not that banks are not trying to innovate; they're trying their best, and they are trying what they should be doing. But still, somewhere in a larger market, this is something still an untapped opportunity, complexed by diversity to internal silos to all other things, right? And the proof of it is maybe in your mobile apps. You open your phone and see how many mobile apps you have in a banking side, which one you use the most, and how often do you use others, and why not, right? So while capabilities are there, it is important to drive a digital strategy which is able to serve the real customer needs, not trying to have everything in that place, and make sure they are able to utilize the things at their best. So over to you, Shreya.
Thank you, Sumit. Topendra, my next question is to you. It's a specific question. You know, as of the first quarter of the current fiscal, almost 58% of your accounts were opened digitally. And even under term deposits, one of the three of your products was sold digitally. Now, looking at these figures alone, can we safely say that digital is the way to go for RBL Bank? And more importantly, are banks looking at a digitally focused, human-like way of approaching customers?
For sure, I like the homework. So you're right. So yeah, you're right. So what you're saying is that what we are saying is, or what we are seeing is that there is an identified shift which is there. So there is no taking away from the fact that there is adoption which has voraciously gone ahead and happened in the last 3-4 months. Okay, and like you read the numbers, and I mentioned in my previous spiel also that most of the transactions which were traditionally branch transactions are today happening on the platform, on our digital platforms. And so enablement today has become a big point for us. And that's when I say, some of the roadmap which was there maybe a couple of years later is to be pulled in and has to happen immediately. Because movement into branches, while it has not, we are still to see the real impact of COVID, seeing some part of lockdown or some hesitance of customers moving into closed spaces, etc. So we don't see that kind of traffic as it was maybe in March as yet, but there is a lot of change which is here to stay. Okay, the behavior which has got set in now, and the inertia, the hump of inertia which has been crossed as of today into moving into digital channels, this behavior is there to stay. Having said that, there is a lot of, we have seen this behavior in another portfolio of ours, which is purely digitally acquired customer portfolio. Like you mentioned, our number of, we are opening 4 times more savings accounts through digital than we are doing through traditional. So if you look at that, in that portfolio, we used to run this portfolio earlier as well. It's a 3-year-old portfolio that we have, and it's a business that has been existing since then. What we have observed is there is a paradigm shift there. What we are trying to do there is not to pitch a different product out there. So it's the same product that is available to traditional is available in digital per se for the customer. The onboarding process has changed drastically. So there is a paradigm inversion that has happened out there, where we are saying that we will we are onboarding a customer digitally today and then moving him into physical for engagement. That previously used to be the other way around if you look at it. So the customer used to be acquired traditionally and then migrated into digital channels. But today, that is an inverted paradigm that we are talking about. We have inversed the entire paradigm, and we are seeing a lot of movement. So net, in our scenario, what we have experienced is it's a hybrid approach that works best. The ratio between digital and physical varies at times depending on which customer cohort we are talking about. But at the end of the day, there has to be that human touch, especially in banking, which is requisite, especially in the India scenario. Yeah, and whether it is India or Bharat, I mean, I'm talking about our country per se. In that scenario, what we have observed is that we are looking at a scenario where it is a hybrid approach which works best fit, and engagement is driven by that human interface per se. So while digital is critical, the human interface does not go away anytime soon.
Right.
Over to you.
Right. Thank you. Next question is to you, Ashish. Another specific one to you. The Ministry of Electronics and Information Technology recently ranked Fino 77th out of the 100 under its internal ranking for digital payments, which is much higher than many public and private sector banks. So what went behind achieving this phenomenal score, and what lies ahead, when I say Fino and digital payments?
So let me put it this way. Since the time we set about, setting the bank up, based on the fact we also didn't have any legacy, all our processes which touch a customer are end-to-end digital. From an account opening process, if I look at it, we have 99.9% of our accounts are eKYC based, and we do an account opening in 3 to 4 minutes with a over-the-counter debit card given to the customer. So we set about defining for ourselves what is the definition of digital in context of our own customer segment, right? Second aspect is, as far as meaty this thing goes, yes, last year we've, it is, I would say it dovetailed with our business model, and which is why for a few months we were right on top of the chart. We were number one for about 3 or 4 months. And we kept varying between 1 and 5 on those charts. Having said that, we are, we are the 5th largest acquirer on the AEPS side. We are the largest deployers of micro ATMs in the country. We deployed over 2 lakh micro ATMs in the country. And, both these coupled together is what we defined as digital transaction, what looks after the needs of our customer segment. And typically we define the mass market in our bank as somebody who owns about anywhere between about 1 lakh to about 7 to 8 lakhs a year. And we went about understanding what are the needs of this person. Today, can I say anybody in India is unbanked? I think that's a fair statement. I think multiple bank accounts will exist thanks to PMJDY. But question is whether you are underbanked, whether you're getting the kind of service that you deserve, you want, whether you're getting at the time of your need. So we went about coupling, and we said phygital is the model that we will drive. So processes are end-to-end digital. From a customer standpoint, if I look at it, our mobile banking application, which an account holder used to download within the first 7 days, was about 35 to 37%. Post-COVID, in the last 6 months, we've seen that number has gone up to about 45%. So that also, even in this segment, we see an adoption of technology. We see UPI transactions going up. So it is not, even Bharat, and I define Bharat as, let's say, the Dharavis or the Manpurs or Bombay is also what I define Bharat, because the migrant population or my segment of my customer segment comes and resides in equivalent of these areas. So this is how we went about, and we're a merchant, merchant-driven bank where we've got franchisee setups. We've got close to 250,000 merchant base. We add about 25,000 a month. And these all parameters is what has helped us drive digital from a respect of Fino's customer base. Back to you, Shreya.
Right. Thank you. Very, very insightful, Ashish. And interesting as well. Sumit, your report, FinTech and Digital Banking 2025 for the APAC region, specifically estimates about 48% of banks in the region to leverage AI or ML technologies by 2025. Where do you see Indian banks in this context, and to what extent and forms can you foresee both public and private sector lenders in utilizing artificial intelligence and machine learning.
Okay. Yeah, very interesting, Shreya. And I should also say, besides Topendra, nice homework. So let's look at this data from a larger perspective, right? So AI ML is a technology which is rising. It is supposed to be the game changer, and the use is on the rise. Okay. Now it's not that technology was never changing. Yeah? So technology has always been changing. What is alarming or what is interesting is that the rate of change of technology has risen, and what it has provided is with more insights, right? So now that we have insights, can you use these insights to provide a better experience, maybe to grow revenues in the background, and do be a winner out of all the competition, right? So AI ML is one of the technologies which will drive, is what we believe, in sense of driving the personalized interactions. There's a huge potential, untapped, and a potential opportunity. Now, coming to where we see Indian banks adopting it, there is no right or wrong answer, right? So the first and foremost important part when it comes to digital strategy or transformation is to put your customer first, right? So typically when we talk to banks in India, and some of the things that we hear from them, there are two main challenges. The first challenge we hear from them is they have created different silos in their banking systems. So mobile banking is one silo, internet is another. Similarly, there are different channels. Now the information is scattered. From a customer side, the experience is fragmented, and you need one strong platform which can orchestrate the journey not only internally but externally to drive all customer interactions. So this is one of the major pain points in the country, and this is right from top banks to different banks. The second biggest challenge that you see is on the it is related in a way, right? So it is to some extent you see neobanks coming, you see some extent internal inefficiencies cropping in, and then a global pandemic event accelerating the things. So combine this all together. How do you drive that speed to market and provide a better insightful experience and do the change faster, right? So this is overall technological impact, and AI ML is going to play a significant role depending upon how much you want to use, where you want to use. Does it make sense for your customer to solve that problem? Only then you should reinvent. Maybe, yeah, if it is not, then leave it for somebody else which makes sense for him to do better. It's all about your customer, where it fits best for him or her, right? So
right. So, gentlemen, I think all of you have mentioned this, and the customer experience is, of the utmost importance. So this question is to all of you. I'm going to begin with Ashish. Ashish, what are the priorities for banks under their digital banking strategy? Is it revenues or customer experience or partnerships, or is it a mix of everything? What do you think?
So if you ask me, my sense is the first thing that you need to internally sit and debate in any organization, and especially when talking about banking, is what is it that you want as an output from your digital strategy?
Okay.
What is the point that you want to reach? Is it for you a growth in numbers? Is it cost efficiency? Is it hygiene? Is it risk categorization? Is it efficiencies? Is it seamless customer service? What is the end point? Once you've arrived at your end point in terms of this is my top two agendas that my digital strategy needs to drive, I think everything just falls into place automatically. Because so let me put it this way: when I look at Fino's example, on day one we believed that we would require and this is just taking up from what Sumit was also mentioning sometime back. What role is AI ML going to play? Somebody would have said, you're such a new bank, why are you thinking of AI and ML today? We said, no, we believe that in the next 12 months of becoming bank, we would need it, and we invested in that from day one. And we started doing things like, at what point is this merchant going to follow? Is this franchisee going to stop transacting with me? He's showing or she's showing trend in that nature. Is this customer going to drop off? What is the next best product for this customer? So this is on the growth side. You can have a backend engine which fuels that. You can have various customer-based strategies on your digital side. But the most important thing is you have to first decide as the organization, as the management team, as the leadership team, what are those top 2 3? Because if you try and go for everything, my sense is you land up nowhere. You have to decide what top 2 or 3 agendas that your digital strategy needs to fulfill for you, and you should be happy with that. And then you build around it. Once you start doing that, it'll all just fall in place, because the various tools that are available today, you need communication tool, plenty of them available. Self-service tools, you can build your own processes, you have tools available. You want risk control tools available. So it's just a question of prioritizing that, the number of tools and what is available in the market today. And you don't need to build everything on your own. There are enough and more fintechs and enough and more technology companies which are providing these, which need to dovetail into your systems and into your strategies. Back to you.
Thank you. Sumit, the same question to you. What are the priorities?
Okay, so I completely agree with what Ashish has said. So there is no one single thumb rule for everyone. So when you look at a digital strategy for the banks who have been successful, the most important ingredient has been is that the digital strategy was a means to achieve the overall strategy. It was not something they were doing on the side. I mean, if you do it on the side, it's like one other thing you are doing and it does not add up. So this means that you need to know what you are doing first. So identify top 3 priorities, as Ashish said, and then chart the roadmap around it. So for example, if you are an incumbent bank and you have a large market share, and you may be trying to protect that market share from digital attackers, right? So then your strategy is going to be little different. But if you are maybe trying to expand into a new business segment, maybe trying to go in a digital lending faster, you are going for better market share with more revenues. Your market, your strategy is going to be little different, right? So there is no right or wrong, but there is still a baseline to everything. So whatever your overall strategy is, baseline is again, right? So if you talk about revenues, for example, you want revenues, but then you suddenly don't think about revenues. You think about customer first. What are the needs? What are the pain and gain areas? You create a customer value map. When you have a value map, you don't boil the ocean in one go. You figure out how to achieve it progressively, and every step is again leading to a overall larger, bigger picture that you don't, you can utilize it again. So and if it means to achieve that overall strategy, partnership is required. It is a means to achieve the end. Then you identify the right partners who share the same mindset of a customer focus along with the experience. So end of it, it has to roll it into one. Otherwise, it is scattered and it does not end up.
Topendra, what's your views there? What have banks put right at the top of their list?
So what both Ashish and Sumit said, I mean, there cannot be any variance to that actually. I mean, it's absolutely bang on. See, the limited incremental point that I can add is that while the strategy is defined in terms of what you are expecting out of your digital foray, you generally tend to break it up basis your capabilities as well as your intent to service the customer. So for example, there are 2 ways in which we have broken our strategy. On one side, and this actually is in line with what Sumit mentioned, on one side it is the customer first approach for the channels, and on the other side, when we are talking about acquiring, we are anyways well known in the market to be a partners ka bank. So in both senses, when I'm talking about channels, the 3 pillars of engagement of our strategy are engagement, enablement, and trust. So when I say engagement, we are talking about how many customers are how am I engaging those customers, and how we are taking that engagement level forward in terms of number of products, number of taps, or number of ways in which he is coming in, the customer journey per se, all folded into one. It is at the end of the day, how am I engaging with these customers? The second piece is at the enablement piece, which is, am I giving him enough opportunities to transact with me on the channels itself? So that is, I have already spoken about it earlier. there are a number of ways in which we are trying to enable things, and I'm sure every bank today is working towards that direction in terms of how do I enable more and more branch transactions on the channels per se, and that's I'm sure the priority around in many cases. The third one which I wanted to speak about is building trust, and that is a critical element in the digital strategy of all us banks per se, because like I said, the inertia was always there primarily because customers did not trust digital channels as much previously. Having said that, one, per force, and two, because of visibility and the way adoption is taken forward, we are seeing more and more people coming onto the channel now. Now I have to retain that trust that they are showing there, so that they continue there, and the behavior is more, it's much more permanent rather than it being transactional. So therefore, that building of trust has become very critical for us. And we have been doing a lot of things around that, right from doing multi-layer security, platform that we have created ourselves. We've also enabled the customer out there in terms of giving controls to them, right from card control to app control to giving him data and information in terms of how his app is being viewed otherwise. So all these things are actually building more and more trust, and that it also includes education. So customer education is one part of that as well. So we build that trust consistently so that he sticks on with the channel more and more. So this is from a channel's perspective. The other side of it is the strategy towards partnerships. Why do I need a partner? While I run my own businesses, I am a bank which is somewhere between small and medium-sized bank. Okay, and we know that. So we have a particular distribution model which is there at a particular size, and that is a given. It doesn't change because I say so, right? So given that scenario, my partners add more distribution strength to me and create more avenues for building newer businesses. So we have been able to achieve that right from the day go. And like Sumit mentioned a while back that uh, the strategy of some banks are to begin with partners because they want to be in a particular way, and that's exactly what we were maybe a few years back. We have been evolving in that space big time, and now we are not only great partners in the businesses like acquiring or wallets, or in terms of AEPS, the BC network that we have, etc., but we are also one of the frontline players in the neobank circuit as well. So everything put together, it is actually how you decide you want to be as a bank, and that is the persona that you drive through your digital strategy as well. Over to you.
Thanks. So, well, interesting one. So Ashish thinks that while devising such a strategy, it shouldn't be scattered but be focused on a few things. And Topendra believes that it should be more focused around engagement, enablement, and trust. And Sumit says that digital strategy is a means to achieve the overall strategy. Very, very interesting one, gentlemen. So moving on to the next question. So my next topic is on the neobanks. Sumit, I'm going to begin by asking you that can banks keep up pace with neobanks, or partnerships are the only win-win scenario here?
Okay. Yeah, thanks, Shreya. So let's just look at a neobank model first, and then we can start bringing thought process around. So if you look at some of the neobanks who have done things well, they are solving some simple problems and trying to do it better. So they're not trying to boil the ocean, some small things, and they're doing it better. And their overall digital model is digital to the core. So they don't have the baggage like a typical incumbent bank has. Now this enables them to operate at a better speed, right? So they have a better time to market. In line with doing the things they were doing better, They also did not try to reinvent the things they were existing, right? So they're trying to partner, so to provide best of the breed capabilities and being a single platform to orchestrate entire customer experience and not trying to reinvent entire wheel. So, and some of them who are solving the right problems have clicked, right? So, and you see examples all across the world. And this is one part of the puzzle, right? Neobanks. And then if you look at India, there are tech fiends, right? So Google with Google Pay, e-commerce players, and all other things. And you have seen how fast they can innovate. They have technology at the heart of their innovation, and how quickly UPI payment experience was taken away from banks is a live example. Now, does it mean a threat is real? Yes, there is some threat. Does it mean that banks are going to go away? No, there will be some share, taken away to someone else. Now we are talking about neobanks. If neobanks were not there, somebody else was doing better, it would have gone to them. So the point is, can you keep pace with the innovation that market is expecting, and can you do it with speed, right? And if you want to keep pace with the neobanks, it is not only partnership is again a means to achieve the end. The most important question is, are you looking at basics that we spoke about? Basics of putting a customer at the heart of your strategy, your digital strategy again as an overall strategy, keep playing a role as one platform to orchestrate all customer interactions across all different needs, bringing partners, internal branch employees, bank employees, customer interactions, everything together to ensure that his needs are fulfilled. If you can do that, and you will be successful. And there is one more thing that I would like to add. So it's an ongoing journey, right? So it's not that one time you invest, you win, and then you sit. It's a long battle. So in behind the short strategies that you will create to battle, you have to think on a larger lines, look at a larger platform play, because this is where across the world market is moving. And and end of it, partnerships are going to come as part of larger platform play. So one ecosystem play as a power of one to win things. That's what I will say. What do you share?
Thank you, Sumit. Topendra, the same question to you. What are your thoughts on neobanks? Are partnerships the only, the win-win scenario here, or is there any other alternative?
So that's a question to me, right?
Yes, Topendra. Yes.
Hello.
Yes, Topendra. Hello.
Hello.
Yes, Topendra. The question is directed towards you. Yes.
Am I
Okay. Hello. Okay. Can we, Ashish? Ashish, let me put this question forward to you. What's your view there?
So let me put it this way. When if the only way to grow is on your own, then you're talking of just kind of a linear growth, right? And come to neobanks and partnerships, it reminds me of this dialogue from the movie Border. हम ही हम हैं तो क्या हम हैं, तुम ही तुम हो तुम क्या हो, right? So I think there is a very, very large case for partnerships when it comes to neobanks. And if I specifically categorize them in our respect, if I look at it, today on the DMT side, we are the fourth largest remitters. We do over 4,000 crores of domestic money transfers in a month, out of which 60% is done is done by our partners who are with us. Right? On the APS and micro ATM, if I combine it, again, about 25 to 50% of my throughput comes in through my partners. Now, the way to grow, you have to look at what is the neobank doing at the end of the day, or what is the partnership doing at the end of the day. He's giving a user experience to a certain set of customers to which he or she is able to reach out as an organization. But you as a bank have the rails behind, and that can add on to the value add or an experience that becomes seamless from that customer standpoint. So to my mind, you got to take up a neobank who dovetails with your strategy, with your customer segment. like Sumit brought out, there are enough and more neobanks, or I would say partners who are reaching out to different segments of population. You need to find out the right mix for yourself. Once you've identified that, therefore, there's a large and big case for a partnership that exists, because linear growth is not the way to go. If you want to expand fast, you want to be a pan-India player, then it is best to kind of partner with these kind of organizations, with neobanks, because what are they finally doing? They're giving a UI UX or an experience to a customer, which is probably a USP that they have built up. And it is always good to recognize that somebody else is doing something a little better than what probably you are doing internally. So maybe you focus on your core, and as long as dovetailed relationship means is an ends to the mean for both organizations, I think it's a fantastic win-win situation that exists on both sides. Having said that, on neobanks and Indian banking rules as they exist, one has to be very clear that onboarding and customer, if you are doing it non-face-to-face, it is a year's journey, and after that you will have to have some sort of face-to-face interaction. And hence there's a lot of investment that needs to make sure that the customer is transacting an actively live customer, otherwise you're going to lose that customer a year down the line when you go and try and touch base, and depending on the segment of the customer. Video KYC, which has come in recently, RBI regulations, to my mind gives a way out of that, and if utilized and implemented properly, that could be an answer to a lengthier customer journey and a partnership when you talk of neobanks or similar organizations. And lastly, if you ask me, and this somewhere dovetails to the last question, digital to my mind is not it's not something that you put into one silo and say this is one vertical will drive that. It's a culture that needs to be set right from the CEO right down to the last man standing in the line, to say that this is how we'll do things, whether it be internal or external. We will not utilize paper. We will have digital. Our communications will be digital. Let us use as simple things as probably using collaborative tools rather than using emails, right? So it's a culture, and finally that culture will dovetail into what a customer or your partners experience. Because if you're just doing it for a tick in the box, then probably you're going to lose it out somewhere in the mystery. Back to you, Shreya.
Thank you, Ashish. Topendra, what's your take on neobanks, partnerships, or is there another way out?
So neobanks, if you ask me, it is the flavor of the season just now.
Right.
So I wouldn't say that in India, neobanks is a technology layer which is serving some customer need in terms of an experience rather than need. It's serving a customer experience per se, something that may be possible to be done by a bank, but have not done them or done it, and there is a gap, and that's what is being fulfilled. So in the Indian context, it is like that. Having said that, world over, especially in the UK, where you see typical the neobanks, where the licensing as well as the regulations are defined for neobank existence, it's a very different scenario. In India, a neobank exists along with a bank. It is a co-created scenario actually. So you need a base of a bank per se. However, there are 5 things which are very critical that a neobank has to understand before it plans to take on any bank. So while we can say there are scenarios where they will take away some market share, or they will hit upon the overall base of the bank, etc. Let's understand what a bank does versus what a neobank does. Like I said, a bank has a full service of various banking requirements of any individual or corporate together, and it's a far larger activity that is there. In today's date, the neobanks that exist in India, and we work with many of them, are purely an experience layer, like I mentioned before. What are they trying to do is they are trying to create a customer journey which could be a little better in a particular transaction per se. That is one. Having said that, like Ashish mentioned, the entire transaction authentication layer is within the bank. It cannot go outside, and it cannot go outside because one, we are regulated entities, and second, the security or the ownership of the customer from a banking point of view, from a regulation point of view, is with the bank. So at no point of time will the bank part with that ownership, and cannot part with that ownership because that's subject to the license. So anything that happens to the customer from a security perspective is the onus of the bank, and therefore the authentication layer is the most important thing which stays within the bank. The third thing which is there is, India is still a DIFM country. It is not a DIY country. Okay, so it is a do it for me kind of an economy, right? Now in that scenario, while you give a very snazzy tech layer, like I mentioned earlier, we have seen a little, a very prevalent case of a hybrid model. And I remember Ashish mentioning a while back that, we're talking about phygital. Yes, that could be the word. And when I say hybrid, I mean something like that, where, you still need that physical, human touch for an Indian customer even today. And that's what our experience goes to say. So if you're creating a neobank, which is a completely digital interface, we're not sure how far it will go. Maybe it goes some distance with the millennials and the Gen X using it. But at the end of the day, the transactions that are today hosted in this kind of scenarios may not be of the size that is actually, driving the overall flows in a banking environment. The last and the more important thing is also about the fraud control. The moment we move into digital, there is a whole spike of vulnerabilities that you start building when you evolve a channel. Now these vulnerabilities, while there are various fraud control measures which are there, but they are coming in and they are moving fast as well. So how does the fraud control come in to play is something that we need to understand. And that is when all these things are taken care of, what comes into play is the economics. Does it? So like, again, Ashish mentioned, we're talking about video KYC today, which will rationalize the cost to some extent. But in today's date regulations, there is still a requirement of a physical touch in some form, or rather an interface in some form. Okay, so that is cost. So all put together, how much of the economics works out basis, the banking piece having limited revenue streams and also, slim revenue streams, how much is really left on the table to actually negotiate on is something is yet to be seen. So there are cases and there are evolution which is happening. The incremental distribution nobody can take away from neobanks. The incremental experience layer that we're talking about, of course, in today's state banking, I'm sure they are better off in quite a bit. Given these two things, they are adding to the overall banking layer. So therefore, partnership is the way to go, definitely, in the longer run. But will they take away share, etc.? In today's date, they are actually riding on the banking platform. So there is no way that they will take away share. They will come and sit on top of a bank and do it. Tomorrow, we have to see how the regulator comes by in terms of the regulations, and we can, have a different conversation at that point of time. In today's date, it is only partnership that will work for them, not for us. I mean, banks will still be there per se.
Okay, thank you. Next question, Ashish. How would you plot the path to where Indian banks could be in the next 5 years? What's your view?
5 years is a pretty long time at this point, but I would say, if the economy has to go in the direction and as the vision of the government, and that if you have to move towards a 10 trillion kind of an economy, then there is definitely, banking has a huge role to play in this, and that turnover of banks would probably grow up by anything between 5 to 7x of where it is today. And now, in case now that's at a very larger level. If you look at it, what you got to get right is the fact that COVID, to my mind, has given us one big opportunity. And like internally, we call COVID as creating opportunities in virus-infected days. We stopped calling it a pandemic internally in the company. So it has shown us that digital is something that is here to stay, and it has to just keep growing and growing from here. If banks have to grow at this pace to keep pace with the growth of the economy and aspirations of the country, then a lot of your processes and banking regulations will undergo a certain amount of change in the days to come. Non-face-to-face will become will become the new normal, if you ask me. If non-face-to-face has become the new normal, then AI and ML tools to contain risk and fraud have to be deeply embedded into your processes, because as you keep moving away from non-face-to-face, that means you need to rely on other aspects of data to ensure that the transactions are kosher, and the trust factor, like Topendra had mentioned earlier, is something that's the very basic of banking, right? Banking is a business of trust between two individuals. So to maintain all this, to my mind, banks will need to really focus on newer technologies from a digital standpoint. Blockchain is in here to play a big role if you have to do that. Remote banking or video banking would probably become a new normal in the days to come. And this will not only, a lot of our transactions today in scheduled commercial banks are I would say non-face-to-face and done on the basis of documents which are read through technologies to make sure that those documents are correct. And hence all this, to my mind, is going to keep moving towards the next level if the economy has to head in that direction. And naturally, if the economy has to head in that direction, banks have to play that role, because they are really the fulcrum around which the economy moves and churns itself. Back to you, Shreya.
Okay. Thank you, Ashish. Topendra, if you could throw some light on this and quickly, like your quick thoughts on this.
So I think Ashish covered quite a bit on that. I would want to add to that, and I think I will lean on the previous question, which is how will partnerships develop? And I think partnerships will develop well, and with fintechs, creating their space, of course, in the market, and also creating customer experiences per se, it is bound to flourish. We will see a lot of co-creation and a co foray into various spaces in terms of from a product perspective or from a customer experience perspective. There'll be a lot of co-creation. The platform play will increase manifold. I mean, we already see UPI the way it has changed the entire scenario per se. So the platform play will become more and more wider and more accepted, and more players will come into play. I think I mean I am too not great to in terms of commenting on this, but I see thoughts of from a regulatory perspective. There should be certain things that will change dramatically from where it is maybe today from a digital perspective, because we have seen a lot of things which have changed over a period of the last 5 years, and therefore the next 5 years will be hastened much more. So more or less, if you look at it, where we are to where we will go may not be 5 years, actually, maybe much earlier. We will see a few cycles within these 5 years per se. Yeah.
Right. Sumit, if you could just sum it up, what's the road ahead for Indian banks in the next 5 years, 10 years?
Thank you. And I think Ashish and Topendra have already covered some of the points that are very relevant. One, there is a larger platform play in picture, and it cannot be ignored. This is the easy and the right way to go forward. We have spoken about partnerships, overall ecosystem model in which you can thrive, not try to reinvent which is already existing, grow together. There are some of the other points, and this is something from our day-to-day interactions with some of the banks in the country. We are seeing a trend where banks have ambitions to become super apps. So they not only want to cater to the transactional part, they want to see how you can go beyond it and combine it all together. It's still very transactional, but being a part of life of somebody, but yet take care of all the ecosystem components, act as a super app. Then the other thing that we see is that there's a tremendous potential in the country. While financial inclusion has given some wings to it, it is still a very, I would say, unlocked opportunity. Earlier, Topendra mentioned that something has been unlocked with COVID. You're seeing a rise, 1 in 2 FDs being booked. And there are a lot of people who are having inertia to digital. They are going more digital. So there is an unlocked So some opportunity has been unlocked, and it is going to rise more in next few years, and everybody has an opportunity to tap that. This is another one. The one thing that I will say is that the rate of change of technology that I mentioned is playing a big role. While technology has always been a business enabler, the question is how well you use it, along with the other things, is also going to make some of the difference. So a quick example is, if you look at AI/ML, the example that we took. Currently, if you see the adoption, it is more to refine internal processes. It is not yet being used to create a rich customer experience or drive a lot of revenues. So while the technology is there, its adoption in terms of how you drive your digital strategy will change in India, and with the open mindset and a better thing for the future. Yes.
Right.
Thanks.
Thank you very much, gentlemen. Also, our listeners have shared some questions. I'm going to take as many as possible. So the first question is by Sharon Samuel. She says, what is the threat levels from current UPI payment players? Who would want to take that? Ashish?
I think UPI is basically, it's again a question of partnership. You want your UPI transactions to grow. UPI is a medium which is available naturally through your bank's mobile banking application and your internet banking. You can create your IDs, do that. But it's a question of dovetailing. In the neobanks, if I was to put Google and apps like these in that context, banks are wanting to reach out to a population which is probably not banking with them today for these smaller transactions. And from that respect, I think it's a question of your strategy, how it dovetails with. If you want growth on the UPI side, on transaction growth, and you believe that partnerships with such players is good for the bank, I think it's a great strategy. But otherwise, you are also looking at it from a threat perspective, that if you look from a threat perspective, tomorrow if these organizations was to become banks on their own, then they have given the customer an experience which he or she wanted, which naturally the bank was not providing, and hence the customer may tomorrow want to shift to that organization once he or she, like Topendra mentioned, that finally today you have the bank controls it because the bank's license is with the bank. The authentication medium is the bank's this thing. The liability is finally the bank's liability, right? And hence tomorrow these organizations was to become banks, they have adequate amount of data of the customer, as also they've given the customer a UI UX experience which probably they were looking out for. So definitely that threat would it's a double-edged sword in that respect if you look at it from that prism. Back to you, Shreya.
Thank you. One more question by Sunil Rajak. The question is, how digital strategy brings non-retail customers like startups, MSME and mid-corporate customers into the fold? And do we need to have different digital strategies for different customer segments?
Yeah, let me add to it, and then
yes.
anybody from panel can add. So if you look at a business side context, the customer experience is outdated even as of today compared to the retail side. So there are a lot of customers from a small business to large corporate, all of them, right? They log into different portals to do certain part of it. They lack 360-degree view at times. And this is a common problem across not only in India but globally, right? So banks have in last few years focused a lot of focus on retail. I mean, some part SME and large corporate has totally taken a backseat. So this is something, an insightful thing for next few years. There will be a tremendous shift. There are already some indications globally happening. This is one part of it. And second part is some of the things are similar to retail, right? So the partnership model to other things, right? So they are equally true for them. So some of the things which banks are able to provide to retail customers, they are not able to provide the same capabilities to business, even if they want to buy for their employees. Very as simple as that. So it is like disparity with same capability. So it's just like taking a back seat, and there's a huge potential and a huge change coming, I would say.
Anyone else would want to add to that?
No, so I would say, I would be with Sumit, and just to add that yes, you need different strategies for different segments of customers, especially if you will have to differentiate between the retail and the corporate, whether it be MSME or even small businesses. The needs are a little different, and your digital strategy will definitely have to cater to that or factor that in, because it's not going to be a one size fits all, definitely.
Well, Sunil Rajak, I'm hoping that was helpful. So I think that's all the time we have. Oh, yes, please, Tupendra, please go on. Sorry.
Sunil, I would want to mention that, the entire market or the banking segment along with the fintechs is tending towards n is equal to 1. So there is no way or no place for, all size fits all anyways. So while there is segments, I mean, you can talk about retail and corporate, but I would go a little distant into it to say that, there will be these micro cohorts of customers which you will engage with at a particular level, and slowly and steadily tend towards that n is equal to 1. And the sooner we do it, the more you benefit out of it. And that is where all these technology stacks in terms of AI, ML, etc., which will come and play a major role into these spaces, because everything is about the data and the behavioral information that you have about each customer set or the customer per se, and therefore you will reach out to him in a much more personalized manner. So that's how it will work, and it is working. In fact, we've seen green shoots out there already. So I'm sure that's the way to go. Thank you.
Thank you, gentlemen. So that's all the time we have, and thank you, dear speakers, Ashish, Topendra, and Sumit, for sharing your views and experience and adding value to this roundtable discussion. I would also want to thank the participants who tuned into ETBFSI's virtual session and could manage to get some excellent insights, into digital banking and future of banking from our excellent speakers. Thank you so much.
Thanks, Shreya. Thank you, Ashish, Topendra.
Thank you very much.
Thank you.
Meeting.
Thank you so much.
Thank you so much. Bye-bye.
Bye.